Hey everyone, so it's been a little while since I've posted any new content here because really I've got some exciting things slated for next year 2022 that I've been working on and can't wait to share. That said, I wanted to send out a quick video here regarding some concerns I've been hearing quite a bit lately. Most notably, are we overdue for a major market correction? So we've had a lot of money this year pouring into assets because of low interest rates, and then you couple that with the Federal Reserve in one way or another dumping $5 trillion into the economy. What that money does is it goes and buys things, which has really lifted the markets this year. So the way that the stock market works, as I'm sure you all know, is over the long run, it goes up. But over the short run, it goes all over the place. So if we take a 12-month period, the odds that the stock market are going to be positive are about 3 and 4. So that means if you're a new client starting in BWN today, there's a 1 out of 4 chance that your portfolio is negative 12 months from now. However, if we stretch that over 3 years, your odds become better than 9 out of 10 that your portfolio will be positive. And then obviously if we stretch that out even longer, odds move even more in our favor. Now, along the way, there's a price to pay for investing. And that price really is volatility, meaning, albeit sometimes violently, our portfolios can zig and zag along the way. And the reason that we get that is really due to uncertainty. And you could argue that there's definitely a fair amount of that out there as far as uncertainty is concerned. We've got inflation, government debt limit approaching, pending tax law legislative changes, sustainability of corporate earnings going forward, the Delta variant, supply chain issues, tons of reasons. So in an average year, the stock market will drop from its all-time high about 14%. And that's on average. That would translate to a drop of about 4,000 or 5,000 points on the Dow. And when that happens, everyone is going to lose their mind. But in reality, it's a very normal thing for the stock market to go through. And so far this year, we had a 4% pullback in July. We're currently about 4% off the all-time highs now. So are we due for a correction? Well, by that metric, I would say yes. Now, could we go another day, another month, another year? I really have no idea, and I would never claim to know. I think anytime a forecaster or a financial advisor, gives you a forecast with any amounts of certainty, should run in the other direction as fast as you can, because really nobody knows what's going to happen in the short term. What we do know is that the market doesn't just go straight up without any volatility. So I'm not predicting when it's going to happen, but statistically, the norm would suggest that it could definitely happen sooner rather than later here. So we want to be prepared and in a position to take advantage of it when that happens. Now, I have heard a lot of people say, oh, the stock market's too high right now for me to invest. And, again, statistically speaking, the stock market is at an all-time high about 1 out of every 19 days. So that's totally normal. Most years, the market does end at an all-time high. And we don't get surprised right when a Kit Kat or a Snickers bar is at an all-time high. We almost expect that from inflationary pressures alone to drive that. And the odds that the market is higher a year later, even after hitting an all-time high, is still 3 out of 4. So I'd not be like, oh my God, the market's running too hot right now, I need to get out. Even if there is a correction, what'll probably happen is what's happened with the other 100+ corrections, a correction being a 10% drop or more. The market's recovered, and they went on to make all-time new highs again. So most folks continue to invest. Really today, you want your portfolio to be in things that are going to participate in that market's upwards trajectory over time. So you need to have enough of your portfolios in bonds and cash to cover your short-term needs. And really, depending on who you are, short-term could be as long as 7 years if you want to be more conservatively postured. And then the rest should be in things that are expected to appreciate over the long run, like stocks and real estate, where they're more inflation and growth-oriented. That way, even if we do get a catastrophic 08, 09 type event, we're covered with our bonds and cash. We can allow the growth assets to rebound over time. Now, obviously, if you're still working, got the income coming in, your protection buffer should be much less. So all in all, my hope for this video, not only be mentally prepared for when that happens, but financially prepared for the eventual, statistically normal market pullback. Not if, but when that comes. So hope you all enjoyed the video. Again, got some exciting things planned. Please reach out if you have any questions. Take care.